Good morning, everyone. TGIF. Thank God it's Friday. It's been quite a tricky week. However, we did have a bit of a heads up on the 24-hour difference. The last 2 days we were positive. It's not a big shift in though. That's a bit of a concern. But however, if it continues to shift, it will reduce the big picture, and we need that number to get a bit lower. When that number gets lower, then we can continue to be risk on. We're still quite skewed at 9.4, so for every one person selling, there's 9.4 people buying indices. So it's a little bit of a payday. However, the shifting is telling us that a number should reduce. If it continues, then we'll get to zero. Once we go below zero, then the retail guys will be they'll be trapped, and that then will be properly risk on. Do note the VIX is below 30, but we're above its yearly pivot. I don't know if you can see that properly actually. Viewing. Zoom. Yeah, do 125. That's probably better. Yeah, so you can see that we know we're below 30, but the yearly pivot's there. So, yeah, be careful of the yen bubble as well, because the yen is huge, and that's normally a risk off indication when we've got a strong yen. We can see a disconnect of yen and risk, but traditionally speaking, a strong yen should be risk off. And at the big picture, we're risk off. At the small time, the lower level, the 24-hour difference, we're risk on. So ideally, I want that a little bit stronger shift, but 0.4 is okay, I guess. We'll have to see what happens today, and then we'll have to see what happens on Monday as well. So we'll have to see the calculation on Monday. Hopefully they sell and they don't try and buy the dip. If they try and buy the dip, then we'll continue to fall. Dollar bubble, what it did, see that dollar bubble there, we went over here, stayed here for a while, came back, and we're back exactly where we were this time yesterday. So it did this little like foray, like a little journey over here, and of course the retail guys reversed and we came back. So all that movement yesterday, it was a non-event because we're back to where we were. And note that CAD is strong and gold is weak. Hopefully you caught the gold move. I took a tiny micro lot on gold, and that was pretty good. I would have probably used a larger size, but things are very uncertain at the moment, so I'm not using like normal sizes. But that gold one was a good one. So there's some greens on S&P, UK 100, US 30, pound yen, euro yen. This is from last Friday, okay, and it hasn't taken into account this size, this looming Death Star that we got on the yen. Okay, so got to be a little bit careful with the yen. And oil's a sell as well, and gold. It is a subtle sell. It's not a large number. But we're looking for large numbers and confirmations like green, 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 green. See, US 30 isn't. But if they continue, then it's going to impact the big picture. Okay, so you want green and greens, stuff like that. Swiss strengthened again, which kind of makes sense. Let's have a look. There's the Swiss bubble, right? So that's the Swiss movement, right? And then there's the yen. Being second strongest on the smaller time frames, and there's the yen there. So I think what's going to happen, this is the pound euro, yen's going to attack the pound, and it's going to attack the euro, and so we should see big movement on EJ and GJ today and Monday. And so what it's going to do, it's going to do a 10-pin bowling thing, and these are the skittles, and these are going to bounce off. Yen, I think, I might be wrong, is going to come down, and it's going to be in a strong buy, and it's about time it did, because it was up here for 2 months maybe. It was up here for an unhealthy amount of time, and it went over here to the extreme, absolutely annihilated tens of thousands of retail traders, maybe more, blew their accounts, came back, yen came back over here, and what it did was did this motion, and now we're here. Alright, so it's just basically cycling, and we're inevitably, I believe, we're going to come down and it's going to go, and it's going to hit these, and they're going to be like Skittles. This is the bowling ball, and it's going to probably, potentially, if the dollar comes over here, we're going to be quite risk off if we look at things from an FX perspective. So keep an eye on your yen today. If you've got a bit of spare time, you've all got access to the spreadsheet, so just check that yen bubble, and I think it's gonna come down. These two are gonna like reel off, and they'll have to like try and get out its way. All right, so this could be a risk off indication. Let's quick look at the snapshot. So it's reds and greens, you know, that's quite explanatory. You want those numbers to increase or decrease for stronger bias. S&P, so they shorted it, and they shorted it. That diamond is that video that I made in the private channel. It didn't go out to YouTube. It's just a private, you know, 3-minute, 4-minute video, and that's the bit where they went long. That's where I took the video, and then you know, they got paid, but then they shorted it. So they got paid a fair bit here, but then they shorted it. The spike, it did fall, and of course price went up. So these two lines here, that's possibly like the trap there. See how they shorted it on here, and they shorted it again. So, and then what's happened is that we've seen a distance between the SSI line and the moving average, and that's normally quite a good indication for further gains. What you want is like a deviation of the two, and so I think these two lines here, that's the trap on the S&P, and so we'll have to wait and see that. Gold was a lot cleaner. Well, I say that, but it chopped crazy amounts. This spike here would have taken out just everyone's stops. If you were trading sensibly, that would have probably taken you out at a loss, and then you could have probably resumed. I don't know who would have had a $20, $25, $30 stop loss. You just wouldn't trade that way. It's reckless. So this would have stopped a lot of people out. However, we did resume, you know, that trend, and we know that the gold bubble there, we knew it was a strong sell, so you could have held on, but it would have been pretty horrendous, and it could have been expensive. So very tricky. It looks like a stop loss, stop hunt does, and it came down anyway. So horrible, really. Perhaps some big whale wanted to sell up here. Maybe he had an order to sell, and so they had to ramp price up so he could fulfill his sell order, and then we came down. Perhaps he wanted to get a better price to sell at, and so then that's that big move. So pretty accurate, this FXCM trading station. You should get it. It's really amazing. Yields are coming down, so do note that this is going to support a softer USD. If they're spiking, we're going to see we're going to see a flight to safety in the USD, basically. We don't want the inversion. We're still inverted. See how, those two they're out of bonk, the 5 and the 10. If by some miracle the 10 gains, and that stays where it is, that could maybe stay where it is. If that just pops up above 3.16, no inversion, and that's going to be risk on. My concern is this, though. This is my worry, that yen bubble. Okay, so be careful and keep an eye on that today if you can. I'm just going to be watching yen crosses. No trades today. I'm just going to be watching this yen bubble. And stop loss cluster. Yeah, so the largest mover was gold, which we can see 10% shift. It was pretty huge. Largest stop loss cluster is AU. FX SSI have just put out a signal to sell AU. We know technically it's a sell, sentimentally it's a sell. However, we need the fundamentals in play, and if we're going to be risk on and the S&P is going to rally like crazy, AU will go up regardless of technical and sentiment. It's going to be fundamentally driven. If the Dow Jones has a 3% move today, it probably won't, but let's say if it does, then it's just Aussie USD is going to disregard a lot of things, and it's just going to follow those risk on flows, and it will go up. So technically, sentimentally, it's going to be decent, and I guess we'll have to wait and see. And we know that the stop loss cluster below is large. It's not only large, but it's getting larger every day, and it's getting lower. So I think this is going to be ripe for a probe. Okay, so take care of AU, and we've got a low speech as well, the governor. That's in 4 hours time. Minus 71 pips from the signals. This can be explained on the dollar bubble going back and forth, and the fact that GU and EU moved away from being strong sell. They're now sell. They're not strong sell. And if EG is going to be naughty, see, it's quite destructive. It was quite bad for us yesterday. 42 pip loss. Yesterday was similar. So we don't want something that's going to impact our signals. If we're going to have like back-to-back failures on a currency pair, we can just simply remove it. And obviously EG was very sensitive because we had that Eurozone data and UK data as well in the same day, and they were high severity. So there's lots of chop on EG. So we're going to keep an eye on this particular pair next week. If it's horrible, we just remove it, and then I just never reactivate it again. There was obviously a reason for deactivating it. I think it was because it fluctuated a lot. That was prior to our technical checks. So we'll monitor this next week. Be careful. It might be that my FX book guys are they could be more right than wrong on this particular pair. But we're still up a lot. If we look at last week, we're up 419 pips. So we're still up if we look at last week. So it's just one of those things. It was very tricky, and especially if you look at this gold as well. I mean, it's just horrendous. That just destroyed so many people and just caused so much loss. You know, it's just horrendous. So that's that then, and a little bit of explanation about the signals, why we had a loss, chop basically on risk sentiment, and the USD bubble. What's happening is that my fixed book guys are not holding on to a bias with the dollar; they're flip flopping back and forth, and because of that, we're seeing the dollar bubble go like this, back and forth. It's quite frustrating. They might do it again, we don't know, but all you can do is check the bubble chart. If it does come across over here, that's going to be a good indication for AU, alright, because there's a Aussie there, alright, and do bear in mind we've got that speech as well. There's EU and GU no longer strong sell on the summary, so that's the reason for us not getting the signals. And if it goes to neutral, then obviously the next step is going to be buy. The next step is going to be strong buy. So we might not get EU or GU for a while if we go to neutral, but that's fine. It just might mean that Monday might be quiet, Tuesday might be quiet for signals, but that's fine because we want things to align technically. And there's AU as well, just so you know. There's my cat going crazy again. There's the low speech. We've got ECB speaker. And we've got consumer sentiment as well. That can be a bit of a mover, so maybe an eye on that, and keep calm, trade safely. I'm going to be off now. I think I'm just going to be watching the yen bubble. No trades for me. I just took a small gold this week, and I'm doing lots of testing on my Excel, which you can see down there. And that's that. So what I'm trying to do with this is keeping the margin use as low as possible and trying to eke out some profits. It took a loss yesterday because there was a lot of chop. So I'll update you guys about this. There's a particular algorithm to it where it has a SL and TP fixed, and so probability alone it should hit TP more than the SL. However, if we look at the EU, you can see how it was. You can see how choppy it's been. So I'm wondering whether or not EU is the best currency pair to test. Like this is not great. We've got monthly support one here, and we know Dix has got some resistance overhead as well. And it seems like this is going to hold, and it has held as well. If you remember my chart earlier on in the week, I was saying how this was going to be a bit of a hurdle. So I'm wondering whether or not EU is the best currency pair to use. But considering I've done 2 weeks of testing on EU, I'll just continue. I think it might be sensible. and it's just that it's just seeing a horrible chop basically, and it's not ideal for testing. So hopefully you guys are going to be okay. You've done alright this week. I know it's been difficult, but I'm always here if you need. And trade small, perhaps. Just reduce your risk, know your exit, and you should be fine. Perhaps avoid something like this where there's no particular direction. Like you can see, we're stuck between supply and demand on H4. So we could just zigzag. Like I said on Monday, I said on Monday we were going to zigzag, and we did. So yeah, just keep an eye on that yen bubble, and I think it's going to be strong buy. If so, we might be risk off. So be very careful. I'll be back on the weekend because I want to make a video on risk management, and just so you guys know how important it is. I know you know already, but you need to have it cemented in your brain. So have a good day and a great weekend, and I'll probably do a video on Sunday. So I'll speak to you soon.